going to look at trading with support and resistance can be very effective. Of course, you may be tempted to ask, there are a few things you need to know on how to manage your support and resistance strategy, but I'm just going to show you one or two things so if you are out there and you are still battling, so price action is a must known. So price action, support or resistance strategy is very easy for every type of person, any type of person that you're a professional of. Now, these are 9 major area of support of price action: candlestick, chart pattern, market structure, support and resistance, trend line and channels, liquidity and imbalance distribution, demand and supply zones, volumes and key levels. So these are important things you need to understand, when you are doing your support and resistance strategy. Now, of course, you are out there, you are still battling. So you need to understand that there's a career path on global financial markets. So the requirement, of course, the first prerequisite we said is basic trainings for skill set. So if you are yet struggling, now the first place I recommend for you, if it's for Forex, come and join us on AKASHX. Okay, you hear me that? So you have opportunity to come into what is called MDC, free access as a customer, and then you have a choice to now pick an academy section for Forex, even and crypto, for as far as trading is concerned. That's the first place I'll recommend for you. Then you can start, you learn. Now, when you learn basics, and of course, you can come on to me, I'll show you strategy and how to perfect your support and resistance strategy. You want to learn more about just general information about foundational stuff, about crypto, Forex, trading generally, go to babypips.com. It's very simple. It's very easy. You are not paying anything. You can click and join and then go there to learn. But the difference between mentorship and all of this learning is the timing, okay? So because you can ask questions, whatever is the sender have said there is what you're going to see. So look at the learn Forex, learn crypto, trading. So you can go there, technical analysis, trade ideas, all right? So technical analysis, psychology, trading systems, crypto, all of those things. So you can see trading system, technical analysis. So you can click any of them. So of course, if you go there, you want to just learn foundational and all of that. You can start from, I think, grade 1 or grade 2. There are so many things there you can go and study and all of that. So the open, the close, the high, the low, understanding technical analysis, all of those things that you are looking for, advanced charting, right? Visualization tools, real-time data feeds and alerts and all of that. So you can find yourself, learning about all of those things. So volume database, all right, and then talk about a lot of things, all right? So yeah, so mindset for trading success. So it told you successful trading is not just about technical analysis, it's about mental game. Patience and discipline are vital traits that can define traders journey, right? Acting impulsively or overreacting to every market fluctuation without a structured plan often lead to unnecessary losses. Sticking to a whatever and all of that. So it just giving you an idea. Of course, you need to understand. So you can go and study all of this. Now, the difference between this place is that it's free. All right. You don't pay anybody, to come and study here. So it's free. You can, and so the only difference is that it can take you a little time, but there are in fact, this is the best platform of basic foundational education about Forex, about trading in general, that you can have in the marketplace. Okay. So, but now, why you ask me, Felix? So, why do you recommend this place for me? Yeah, I recommend this place for you because it's easy. It's free. You don't need any complaint to say, "Oh, I do not have enough money. That's why I can join," and all of that. It's free for you. So you go there and learn and all of that. Now, why do you now? You want to ask me, Felix? Why do you now recommend AKASHX as a basic training prerequisite? Now, number one is that why I recommend AKASHX joining through the free platform called MDC is that I recommend this aspect. So especially if you want to trade Forex, I recommend AKASHX. Okay, AKASHX, right? Now, why I recommend AKASHX is that if you join AKASHX, it's a yearly plan. Number one, you're going to have access to so many things. All right, you're going to have access to so many things. You hear me, right? Very wonderful, amazing stuff you're going to have access to. Now, but the point is that once you have access to it, it now give you room, right? So that give you room to have access to plan B, training, strategy, mentorship in terms of trading. All right. So, for instance, if you subscribe for AKASHX, so you are going to be added to my Signal group, number one. Number two, you can ask me questions. And because I want you to, then another good thing is that if you go to AKASHX and subscribe, then you have access to trading fund, which is like challenge account. So you pass through the process and then the fund become yours and then you trade. So that means all you need to bother yourself about when you are coming in through AKASHX is just your subscription fee. Now, trading fund. So now, so you are going to school, and then after you graduate, we are giving you money to now practice what you have learned. Wow, that's amazing. So that's why I recommend AKASHX. Yes, I can recommend AKASHX to anybody. Now, but once you sign up, when you want to get started, you can ask me. I put you through, you sign up, you activate your account. Then you have access to virtually too many things on it. All right, that's why I recommend AKASHX. Now, you equally know I said go to Baby Pips. So, Baby Pips, you go there, you can be learning every day. Of course, you can open an account on some brokers, like I recommend Capital Extend. And so if you want to sign up, I think if you go to our group, you're going to see Capital Extend link, or if you go to the comment section of this training, you're going to see Capital Extend links, and you register. You can open a demo account, and whatever thing you are learning on Baby Pips, you can implement it. You can go on YouTube and read. I know some of you will be watching on YouTube what I'm saying now, then you can learn it and get basic understanding. Now, the truth of the matter is that do I actually need to so because knowledge now, education is decentralized. You can use robot now to learn some things and then implement it. The difference is that when you have a mentor, there are times you are going to hit it wrong, terribly wrong, and then you need somebody to talk to, to actually put you on a path, especially people who are passed through that step you are trying to go through. That's one of the uniqueness about mentorship. All right. So, but do I just need too much money to start mentorship? No, you have access to free education. Even on Plan B Express, we have the cash flow system is free. Everybody come. We go market update every Sunday and all of that. It's for you. It's free for you. So you don't need to pay anybody to be part of those. Like, if you're in Port Harcourt, we do like Thursday presentations and all of that. Then the last Saturday of the third Saturday of the month, we do presentations and all of that. So they are free. All right. So then look at Baby Pips, like I've told you, everything there are free. So you study. In fact, they have, Telegram group you join, they give signals and so many of them. So the difference is that you may not really have a structural mentorship and follow-up. That's totally different. And it may take you longer time because you are not doing some kind of copy and paste of a strategy that has already been proved and working. And that's not the difference. Okay, so I'm trying to be very objective here so that most time when you tell people come and enroll in Plan B so that you learn, our academy is, we have specifically now for crypto, future crypto, synthetic trading and Forex. So I think it's going to cost you was it $500? I think $500. Yeah, $500 for Forex, for crypto, for future crypto and synthetics. And now one of the things is that when you go there after learning, then you have access to the Signal group. 1 year full Signal group. 1 year. You heard me right? Now, then if you just want to subscribe for the Signal only is $600 yearly and $75 every month. Can you see now? So you just now, if you go to AKASHX, for instance, in AKASHX, if you register on $999, that's close to $1,000. I'll round it up to $1,000, but it's $999. And now you have 1 year full access to AKASHX, all the mentorship training and all of that, and you have access to 200,000 capital to practice. After the practice and you succeed in your practice, while you are learning, you are implementing what you are learning. Then once you pass and you do successfully well, then the money is approved as a live fund for you to be trading. So what I've mentored my people, and I said, once you come and subscribe on AKASHX, of course you can subscribe for monthly, but you have access to $10,000, if you subscribe for monthly AKASHX. And now, so for me, if you can up your game to do yearly, that would be better for you because you have access to reasonable fund, and at the same time you have access to all these details, and that's what gives you access to a free mentorship training on trading and strategy that I give you to trade, and of course tell you what to do to pass even your challenge account. They're very, very important. All right, so these are basic things that, of course, you want to understand. So access to valid, and current valid update information, so and all of that. So now let's quickly look at, first, we're looking at Forex. Now, so our support and resistance strategy to trade effectively. Our support and resistance strategy to trade effectively. So probably let me take for Forex. Let's start from Forex first. So I'm going to start from Forex. So let me take a currency, or perhaps, so let me take a currency to do that. All right, so let me take a currency. This is Euro USD. I think I was checking AUD the other time. So let me look at AUD. All right, so here is AUD was that actually what I wanted? Or GBP JPY. All right. When you start trading, you must find a currency that you can easily align with and all of that. So AUD is okay for me. Or gold. Oh, so gold will have been okay. Okay, so let's look at gold, for instance. Now, this if not for this training now, this is what you do. Now, of course, there are three things you need to understand, very vital. They are very vital. These three things are very vital. So I'm going to take off virtually everything from my chart so that we wouldn't have issues, okay? I'm going to take off everything on my chart. So everything on my chart, everything off my chart. Good. So let's take off all of these guys. Take off all of these guys. So I said trading with support and resistance strategy. Of course, understanding price action is very, very important. All right. Now, so for me to trade when I come, but of course, if you are trading Forex, define the context and then the section you want to be trading, maybe London section, or you sometimes I would just advise you, if you are a full-time trader that you want to actually make it a career. So if you're in Nigeria, you wake up, look it as I have resumed office. So what time do people resume office in Nigeria? 7, 8, right? So you resume office by 7, so 8, do your devotion and all of that. So 8:30, let's say by 9, you start your trade. So you can tell yourself, okay, 9 a.m. Nigerian time. So it's already trading session have begun around 7 or 8 London section. And the New York session is, I think, about around New York section should be around 1 p.m. or 2 p.m. Nigerian time, right? If that's the case, very fantastic. So you're going to look at instruments you want to select. So if you are going to be trading currency, I will advise you, if you're a beginner, use Euro USD. That's just the best for you. And now you can, if you want to be scalping too, you can see gold, the way it's actually reacting to the market. You can trade gold, you can trade commodity, but I'm just going to pick any pairs. And so we'll look at the gold. So now take note of this. So let me just show you something very importantly. Now you are a scalper, all right? You want to scalp. Do this. As a scalpers, you are going to work with this time frame, all right? Scalper, you're going to use this high time frame, M15 to M1, right? Now, day trader, you are going to work with H1 to M5, right? Intraday trader, okay? So intraday traders, you're going to work with H4 to M15. Sometimes you can scoop to M5, right? Okay, so get it. So if you're a scalper, you're going to be working with M15 to M1. And if you are day trader, you're going to be working with that H1 to M5. And then intraday, all right, H4 to H15. Now, so let's first look at scalper. And irrespective of who you are, you can always use support and resistance strategies, what we're going to use. So now I'm going to go to 15-minute time frame. So let me go to 15-minute time frame. So as we come, okay. So as a trader, so I'm going to come, as I just come to the market, of course, there's something I do. I use session breaker, okay? I use session breaker. So you know you are a scalper, right? So we use session breaker. So look at it. So as we just come, market is like this, or your chart is like this. If you want to learn detail how to set up chart and all of that, so go and enroll in Plan B Express. So they are important for you. So what I'm going to do is that, okay, you're a scalper. You don't need have too much thing to think about where is market actually going. You just need to know what's market doing. So it can be ranging, it can be trending, but if you want to be on the safer side, however, you want to know, okay, is the market an uptrend or a downtrend? So that you know where to hit more activities on, as it were. So, but that let's quickly go. So, what you want to do now, I'm not going detail about this. Please take note. Those of us who already you are in the academy, you have learned what we call top-down analysis. They are very important. Marking of your key level. If you look at this black line over here, it's a key level, daily key level. If you go down here again too, it's another daily key level. So they are important for those of us who know what it is. But you are a scalper. So now let's go. I'm going to mark this is a liquidity. Okay. You want to learn about this strategy very well, come on board to Plan B Express. I'm going to detail you on why are we checking all of this, right? So remember price action, support, and resistance. So I've marked this. Okay. Now there are two things I've marked now: the recent swing high and recent swing low. All right, recent swing high and recent swing low. That the things are first marked. Then I would have to mark, right? Perhaps previous day low and previous day high. Okay, I've marked all of this now, right? Previous day high, previous day low. Then if I see any other liquidity, I can still mark. So this is another liquidity. So more very, very obvious liquidity are marked. And I'll tell you why. You know, we're going to be using support and resistance strategy. All right. So you will now know why I'm marking this, so that you will not be carried away. You will know when market is reacting and when market is obviously. So there are still other liquidity probably you want to check. But so I'm okay like this. And perhaps this one too had created a liquidity, but so I'm okay like this, right? So now let's go. Remember, you are a scalper. Now 15 minutes to 1 minute. So that means I've checked my higher time frame of internal and external liquidity is 15 minutes by a scalper. Then the next you are now going to go is to go to 1 minute time frame. You heard me right. 1 minute time frame. You know you are a scalper. You are just picking in between small junks, small move, and all of that. So now let's go. So now you know you have marked this as liquidity. Now what happened? This guy obviously had failed rally to get up to this. If he had grabbed it, that make a lot of sense. So, but no problem. Since he didn't grab it, for you, you have missed entry ordinarily. So you probably want to be waiting to see how the market actually probably react at this, right? Support or liquidity area. All right. Then I'm going to wait for this. Now you ask me, Felix, why can't you short from here to here? Now, sometime when there is no good bridging or allowance to the point of your interest, you have to wait for it to come to a reasonable level so that you don't make an honest mistake. Now, another consonant you can now add, and which I always tell everybody that said, no matter what you are doing, and so what you want to add is to support yourself with momentum indicator. What is momentum indicator? Like MACD, all right, or RSI. So here is MACD. So look at what MACD shows here. Now let me show you something about MACD. So, but there's something you must equally understand about MACD. MACD can show you wrong signal, especially when the market is not trending properly. So understand that. So if that's the case, so we look at MACD. This is this MACD here. See this guy. This is the MACD line, right? So that's the MACD line. So that's the MACD line. Let's go. So that is the MACD line. So then you have another one here. This blue. Right? Remember, please, I'm not doing a thorough teaching. So you want to learn more detail and not guesswork, I advise you to enroll. So this is signal line. That is signal line, okay? So that is signal line. Then the next thing you're going to have, it's called histogram. Okay, or do I call it? It's called histogram. So here is your histogram. Histogram. Yeah, so most time I listen to many top traders or professional traders. They tell you a lot of things, right, about indicator, and that creates you not to pay attention sometimes. Now, please know that when it comes to trading, you have to filter out what works for you. It's not about being a professional when it has to do with trading. It's to become profitable trader, right? So get it right. And trading is not about making profit. It's about staying profitable. So now this is MACD line, this is signal line, and this is histogram. Now quickly listen. When there's a cross of the MACD line below the signal line, it indicates potential or a bearish move, irrespective of the time frame, right? So me sometime once the MACD line is already coughing, so it indicates a kind of bearish move. If you look at this guy now, it's more like a double top for MACD. Remember, we're in 1 minute, so you cannot rely on all of this. So, but you are just using to support your arguments. Okay, so this is a potential, all right, moving down. Then, but when this is happening, you have to check in correspondence to the histogram. Is the histogram changing from the green momentum into the red momentum? If it's changing from the green momentum to the red momentum, how strong and how plenty? Now, this is lovely. You see this cross now. It's a lovely one. Why is it a lovely one? So the red was much initially, progressively, and then eventually get fainted. But after this feint, you expect a cross, but it never crossed. And then another one move, much level move, which is momentum, strength move. And then eventually, this was turning and this was fainting. As I see this one fainting, the next you start seeing some histogram changing to green. That's going to give you an idea. Oh, wow, that means we're serious. Now, this is check in consonance with your price action. You are going to see how it actually works. So then a cross of the MACD line above the signal line symbolizes what? A bullish return. And that's exactly what will about to happen here now, right? This is what happened here. Now, there's a cross here, but the momentum, but you take more serious action, especially when the market has actually crossed above the zero line, because there's another line I didn't tell you. So this is a zero MACD line. So when the histogram is below it, I'm painting red, that's bearish. And then, okay, now a cross is about to happen. Can you see? A green histogram is about to be painted. The MACD line is about to cross. So let's quickly return back to where we come from. Can you see now? So you see when I told you that, okay, why will I be shorting here when the market has already moved a major move for God's sake, right? Because if you check at it now, look at it now. So look at your MACD line, look at where they cross. So this is a cross, but yet the market was going. So this is like a kind of divergence. So you can see what the market is doing now. It's reacting. Remember, you're a scalper. So for you to be scalping on 1 minute time frame, you have to be excellently smart and know what you are doing. No guesswork, right? So if that is the case, now the market has actually moved. So for anyone who probably have short the market from here to here, this already about how many pips? About 27 pips, if I'm not mistaken. You know, gold is super fast. So you have taken your profit, right? But mostly you want to look at the market coming down to this point, right? So, but look at what MACD has done, right? So look at Mac. So now support and resistance strategy is a very simple strategy now that you're aligning with things. So probably, but it more packagely more from 5 minutes and above. But so now looking at your 1 minute. So if on I'm taking my support and resistance strategy. So this is how we use it. When I see a stop, look at this is a stop. Then you want to mark it out, right? I want to mark it out. And the market pullback, I expect the market to reject, right? But after this, so look at your MACD equally, it still continue, then this is like a divergence, right? Because the market, the MACD was already crossed down while the market still continue. So what it does, what it did here was to grab liquidity, all right? So after I grab liquidity, return back to the zone below this where you marked, and then got rejected. That should be your selling point. Now, selling it, perhaps, most time again, I always want also that when you are trading, let market get to a reasonable or point of interest. For instance, you have marked this as probably the previous day high or immediate swing high. The market got there and didn't cross, so you are careful. So even if I sell this down, I know that it may not get to the reasonable level, maybe because of this one now here, right? Maybe because of this support here, or what was a resistance before. You know, you're a scalper, you have no business, you are only interested in the market moving now. So you can see this, that's what gave rise to this market. So your eye is everywhere, right? I was checking this the other time and I said, this is a point, this is another point, and all of that. So you can see beautifully the market actually got here, right? So, and you could see your MACD there. You know, I told you guys that the MACD was about to cross that time. Can you see that? Now, this is a progressive cross. It crossed, and the first histogram, the second one longer than the first one, and all of that. That's a very strong momentum that actually moved very well. You can now see that if you want to pass a challenge, so you have seen this point, and then you have taken an entry here. Perhaps if you take an entry here, sometime you may not even be interested in using stop loss, okay, because you are a scalper. Most scalpers don't use stop loss unnecessarily. Except you are a day trader who is trading on 5 minutes. So most scalpers, because it's hand on, okay, haven't found this match up to this point, this across, and then this is then the whole market like jump down here to grab this point, and then we already saw what MACD was doing, right? We saw that there was a cross. So for this person is entering, you know, I was telling you people that when this thing was about to cross, okay, it's about to cross up. Now, so if you look at it here, you know, as a scalper, it's just catching some small junks. Let's take it to this point. Come on, this is 23 pips. So what are you looking for? 23 pips, ladies and gentlemen. So 23 pips. So let's say you're using, especially if you are, you know, on challenge account of $200,000 on AKASHX. So 23 pips, and you're using 0.5. So 0.5 is $5. $5 times 23. How much would that be? Right? 0.5. And then if you go to your MT5, you must have entered 2-3 position. So let's look at it. Right? So let's say 5 times 23 pips. That's $115. And then you have two position or three, you have done $200. Yes, that's how you, as a scalper, but sometimes you're going to hit your loss. So understand that equally. So, but even if you are now a conservative scalper, because we have a conservative scalper will have entered here and put a stop loss down here. So now a conservative scalper is going to enter from here, perhaps, and then put a stop loss here, and is targeting 1:2. All right. So if it's targeting 1:2, you know what is going to give me confidence? I'm going to targeting this point. Right. So that's already more than 1:2. But if you're targeting 1:2, let's look at it here. So 1:2 is about 29 pips. I'm not mistaken. Yeah, 29 pips. Right. That's about 29 pips, 1:2, 29 pips. And that's will have been massive and all of that. So we're actually going to implement one of these I've just shown you now. So you can see a scalper actually don't look at too much volume. A scalper is looking for immediate short kind of move, and that's what a scalper does. Do you get it now? All right. So now let's go back to a day trader. So a day trader is going to use 1 hour. So perhaps let's use another instrument. So let's look at Euro USD. So a day trader is going to use 1 hour. Okay. So let's close all of this. Good. This is massive. Now, this is a key level to key level for me, right? This is 1 hour time frame, and this is a key level to key level. Now, a day trader can resort a particular position into entering into a an intraday and eventually into a swing. But what he wants to achieve is a day trading. That is opening the market and close at the end of the day. Now, this is very simple. You can see this guy has scaled down, and is below the even a key level. So now, if you look at it back to back, 1, 2, 3, 4, 5, 6, right? 7. For over 7 days, this guy have been rocking downtrend, massive downtrend. If you look at your trend line from here to here, right? So it's a massive downtrend, massive. That was an amazing downtrend. And so that's why you want to look at markets or look at it, for instance. Come on now. That's about 160 pips, guys, from this key level to this key level. Now, what exactly do I want to do, as a day trader? Remember, as a day trader, you say we are working with 1 hour to 15 minutes. 1 hour to 15 minutes. So let's go. Okay. Some of you who trade synthetics or futures, it's still the same pattern. So I'm going to just interwoven what we're going to be using. So now, so we'll take out this. Can you see now? I roll out to this point. Okay. So let me clone this. Let's take this guy up here. This is another swing high, which are liquidity area. Of course, you have this one, which you can see just coefficient with the key level, right? Makes sense, right? So now this has actually given us all of this as a major kind of point. All right. So now let's take another swing. This guy. So let me extend this if it's going to give us a consonant. It does not actually give us a consonant, so we have to draw another one. So because they are very important, these are liquidity area. All right, these are liquidity area. So this one actually align with the one we're supposed to be doing next. So you don't need to bother yourself with too many sticks, but there are important levels that you want to mark out. So we're still going to mark out this guy here. That's the lowest. This is liquidity. Okay. So we have another one here, but this is more recent. Is it a swing low? Yeah, not. Okay, so let's go this way. Now, if you look at your MACD, your MACD already crossed, right? So now, so let's go to what time frame? 5 minutes straight. Thank you. 5 minutes straight. So now you've come to 5 minutes. What are you looking for? So, yes, am I supposed to just jump into the market right now? The answer is no, guys. You can't just jump into the market right now. Why? Okay, fine. Look at the price action. You have a low here. Yes, these are already a very nice support, but you have, a key level to contend with here. Number one, you have a diagonal trend line to contend with, which is like confluence here. So you need a break above this point. And if I get a break above this point, I need price action. All right. If a break above this point happened, right? If a break above this point happened, I need a price action. And that what I need is that break and retest then. And I want to have probably something like pin bar and golfing and all of that. Then you are going to now find a trade to long and take profit here. You are a scalper. So for instance, if that occur, so we're coming to this point, let's say you are finding an entry here, your stop loss probably below this immediate swing low. You are a scalper, so you are not a swing trader. You are a day trader rather. So this about how many pips is this? 32 pips. Okay, so let's just take at this point. Are we up to 1.2, 1 ratio 2? The answer is no, right? So perhaps it all depends on what happened when you get to that point, right? So you probably want to now find an entry into that point, okay? When the market crosses over here, as a day trader. Now, but if you had come in earlier, so that means for London section, let's look at it in Nigeria local time. Yeah, so here, I think that was, yes. So it's London time. So you probably will have found an entry by now and try to take profit here, which means your entry will have been somewhere here. And then your stop loss will be here. 1 ratio 2 will have been probably, and most time I don't take trade like this that's close to a key level. So, but let's go to this liquidity here. So 1 ratio 9, 1 ratio 1.9, and all of that. You can trail your stop loss now. So that's you are not just entering market without a narrative. You are working with a narrative, and so to give you reason why you are finding an entry. Now, this is a day trading. So it may take for the beginning of the day to the end of the day. And that's why I always love, if you are a day trader, to start your journey early, probably in London session. Have you seen it now? So in London session. And so that will give you better edge to maximize your profit. Now, look at MACD. There was a cross too, right? And that make a lot of sense. Look at it. There was a cross too. Now, this cross was a fake one. Of course, why will I even take this cross? Even this cross, if not for day trading and all of that, you wouldn't take it because it's close to this point, because it can be rejected. The market can reject this point. But at that point, of course, you're looking at, okay, if you reject no problem, I can just take my profit and go away. You are a day trader, all right? You look for another position. And one of the things I always say is that if you are trading, a day trader and all of that, don't always waste time to cut out a wrong trade. Once it's not your trade and you see that you wrongly entered, your conferences didn't meet up, and then it's already giving you a bad signal, don't get entangled, cut off. That's one of the advantage of a day trader, and that's what they do. They pick up and then pick money and then return back to pick another one and all of that. So now another thing I always say that, okay, sometimes most of you who are beginners are finding it difficult to just understand pure price action with all these things I'm just explaining. And now you probably want to, I don't want to go advanced, because at that point we're now going to be working on certain narrative called, imbalance in the market, right? Order blocks, and then um, displacement and all of that. So at that point that you're looking at fair value gap, that's what called imbalance, and look at, okay, if the market get to a fair value gap, all right, but for you to get a fair value gap that is very strong for you, you want to look at it on a higher time frame for your day trading, like on 1 hour time frame. Or if you cannot find it, you come to 15-minute time frame to see a fair value gap, and then you want to actually react on that and know that the market is going to be getting there. So that's one of the things about the day trading, right? Now, so let's quickly go to uh, intraday trading. So you're going to be using 4 hours. It's the same style I just showed to us. So our support and resistance strategy. So you're going to 4 hours, and that means 4 hours and 15 minutes are your activities and action plan. So what's this market now? This is a downtrend, right? Because this is a high, right? And this is a low. Here we have a high, and this has actually created a low, right? So now, so what do? We expect this market. So what we are going to mark out are point to point, both the external and internal liquidity. So if you look at it now, where we mark now was actually the 3 days ago high, right? Then see the low so far of today, which is the swing low, right? So we have find this. Then we can go ahead to still extend to other ones. Probably this one is aligned with the key level. Then going too far again does not really make any sense, but that can still be an edge for me and you. You know, this is intraday that may eventually form a swing. All right. So we have another one here, right? So all of these points are very important. So look at this one here. So you can just pick the pickable, the obvious ones. You can understand that this liquidity was grabbed, was one market returned back up here. And so now, so this is it. Now, so you can see why I said if you are a day trader, especially if you are in Nigeria, a day trader, resume your business in the morning and do what is needful. Make your profit for the day and close, do other things. So now let's go to 15 minutes straight up. Thank you. Now, if you look at it, 15 minutes straight up, what do we have? So you saw that in 15 minutes, the market actually opened. Of course, you may not be in the market at this time. So the market actually opened because this is market open, I think, right? So coming down here. So here you have all of this point. So here you come to 15 minutes. What are we going to do? We already said this market is bearish, right? So now you can get confused here. So this guy here may just grab this high and begin to come down. So you are looking for a way to short, or eventually you want the market to return back up here. You can see why patience are very important, because these are liquidity. These are the internal liquidity of 4 hours. So you probably want the market to get up here because you were not in on time. You probably want the market to get up here and to crash down. That's where you are looking for price action to sell. You can see intraday, you may have to wait for some time before you can find the appropriate entry. If it's a scalper, you will have used, remember, a scalper or a day trader 1 hour. So a scalper will have gone below now to 1 minute. And what the scalper will have found will be more time to take some trade faster than you. But of course, he will be having more of heartbreaking because it's going to be entering some wrong trade. So a scalper too, when a structure is well set, is going to be working by the market structure shift, right? So this is a low, this is the high that created the low, this is a high, this is a low. So he's looking for a trade here, and so just doing all of this and taking some trade. Then it's looking at when this market get rejected there to sell down, or eventually when the market come up here. So now, why we always recommend again that okay, you probably may be on 2, 3 instruments on your watch list. Why? So that if this one is not working, you can easily see this. But if you have gotten one that's working, you do not need to start gallivanting to other ones. Guys, can you see now? Your profit has been taken, right? Those of us who are on gold, you know, we work on scalping on dates, right? And then once that is taken, you can see that this guy again get up to this point, but we needed a very fantastic rejection from there to be able to short, right? So, but a scalper, a real scalper, sniper entry trader fellow, haven't seen that the market has given all this and start reacting. So, but what he just needed is that if the market come below this, he will short again. But this ought to be grabbed. So point to point are very important because it's an area of liquidity that the market needs to collect and then move. Look at this. Good. This is a perfect example. Have you seen it as this is 1 minute time frame, right? So let's look at what MACD is showing us. Can you see now? So these are, so let me just do example of this now. Look at this. Now, so you know, as a scalper, this is grabbed, right? Right, this is grabbed. So as a scalper, so I'm going to short this, right? And put stop loss above here. So that means, but you know what I'm doing now? We just come in and, so that means, so ordinarily, let's say here, that stop loss here. First take profit will be here. Probably maybe second one come down to this point. So let's go. Let me just see an example, a place where I can see where to take a trade. Let me refresh this. Now it's 100. Okay. So here is NAS 100. So we short NAS 100, right? And we say we put stop loss where? Above that point that was grabbed. And to take, you know, this environment is quite different from what you know. So here and here. So let me say here. But this structure is strong. This is 200 moving average. That's another thing probably you want to add to your. So, okay, I wanted to tell some of us that this is where the advantage of understanding the market bias actually work well. So if you do not have understanding of the market bias properly, so you now want to use your moving averages. So you go to your indicator and add 2 in 1, sorry, 10 in 1 moving averages. So you can now see, because these 10 in 1 moving averages have already shown that, wow, this market is above 200 moving average, above 50 moving average. So because you're using 200 moving average and you're using 200 moving average and 50 moving average. So this is already a potential up move because you are above 200 moving average. Can you see now? So this can equally help you a lot not to make some wrong decision, because this shows like a pullback and got supported at 200 moving average. Just like similar thing here, because look at, this is a low, this is a high, this is a low, this is a high, and this is another low, and this is a high, right? In fact, this is a high. Okay, 1, 2, 3. Okay, this is a high, this is a low. So now, as far as this low still stand, right? This low is still standing. That means, you know, you are a scalper, so you can run into problems sometimes because of the market activities. Let's look at it here. So this is 1 minute. This is 5 minutes. So 5-minute trader. But this has, okay, look at 5 minutes. This was a low, right? It was a low here, right? Created a high, a low, right? So let's look at a high, a low, okay, a high, a low, okay. This one now is lower than this. We now have a low, we have a lower high. It was a massive one, right? You know, the market becomes somehow very volatile, right? So, so you want this guy to break down here. And then, so let's go back to the 1 minute. Now, understand that sometimes the market can twist you around, especially the market that is not well organized, can blow you off and all of that. So, but you have put your stop loss above here. So if you stop you out, no problem. And then you say take profit here, because market can return back here and continue to go up, or perhaps, so, but you know, it's above 200 moving average already, and that's where it's now becoming more difficult. So looking at this guy too, the same thing. So that's where indicators now help you to not to just make unnecessary mistake. Because if you look at this on 1 minute, right? So look at gold here on 1 minute. Come here, there was a gap was filled. So the gap was filled here, right? The gap was filled here. The market broke this high, created another high. Then this return, so become a more serious pullback. So we say we use a retracement kind of tools, probably fib retracement from this swing low to this swing high, and that came back perfectly to a golden ratio, which is 50 moving out 50 Fibonacci retracement level, and got bounce, which can give you another idea. So markets above 200 moving average is still a sign of strength. Remember, because you are a scalper, you can see this guy. Can you see what we'll say? So this sounds like a pullback, as it were. So if you take this swing low, although I don't use Fibonacci on all those smaller time frame, back to this point. So that's a shallow even retracement back to just 38 fib level. And that's one of the things. So, and the MACD is above zero level. So MACD above zero, which is signs of I'm trying to return up, to return and get my strength back, as it were. So, but let's see how it plays out. But look at it. This is still like the continuation of the recovery. Look at on 5-minute day trading activities. This was a massive sell down. Afterward, there was a quick recovery back up here, and that's still continue and more massive, right? So if you go to 15 minutes, you can see that the MACD2 on 15 minutes is preparing for a very serious cross. However, we can get back to this and get rejected and sell down. But these are highly engulfing, massive engulfing candle. Another serious thing you see here on 15 minutes, look at, there's a long wick below, and this is already kind of sign of continuation and all of that, right? So you can see why I say jumping from one instrument to another can be very can impact you negatively. So you have to be very careful when it has to do with scalping strategy and all of that. So trading, so scalping, day trading. So with this your time frame, using your support and resistance strategy, you can be fine. So the same thing applies to Bitcoin, cryptocurrency, right? So this is above, still above 200 moving average. You do your marking, so I don't need to go back to those marking. And then, so if you're scalping or day trading, then this is very, very no volume and all of that, okay? So scalping 1 minute time frame, this is, so for me, I wouldn't even do anything on Bitcoin because there is no volume to give me an edge of doing what I'm supposed to do. So it's better just avoid it sometime, right? Instead of struggling yourself. So when the market is not expanding properly, trying to scalp them can be very deteriorating and can be highly challenging. So you can see this guy, can you see? So above 200 moving average can be very dangerous, okay? Right? So that's why I said you don't use indicator just for using sake, but you use indicator to confluence. This is a low, this is a high, this is a low, this is a high, this is a low, this is a high, and another low. Now, if you break this structure now, that means it's going to continue moving up. Look at this liquidity. If you break it, you break this structure now, which is going to, because we are above 200 moving average, there are so many liquidity lying down here above 200 moving average. So that's where you need to be careful. All right, so now let's go to other instrument, right? So it's the same strategy that apply to other instrument like synthetic trading and all of that. So I'm going to go to derive and then well trade. So these are other areas, of course, you want to pay attention to, because I know many of us are going to be trading synthetic indices using well trade, for volatility, and then using derive exchange, derivative exchange for boom and crash. Okay, so now let's quickly go there. Okay, I don't want this video to be too lengthful. So, okay, let's go to Well Trade first, because actually we have had a place I was waiting to look for a trade. Remember what we said? If you are what? If you are intraday trader, which can equally lead to swing, so you are going to mark 4-hour time frame first. So sometimes some chart can look very choppy, and that's why you need to be very careful. Right. So now here is this market. So you mark here, this is a high and this is a low. Now this is a previous high and this is a previous low. So in this market now, it tend to be an uptrend, right? Yes. Okay. So overall, if you come down to this point, if you are going to take from here, it's still an uptrend. So look at it here. You can now say here, here, to here, to here. So here is still higher than this. This is a high. This is a low. And now, so this is now a high. But for this, concluding this, we're still in an uptrend, irrespective of what you take it to be. So now let's quickly go. You have marked all of these points. So you're going to return back to 15 minutes. So I'm going to use only this one, or perhaps, oh, wow. I'm already missing this market. Okay. You are returning to 15 minutes. And what to look for in 15 minutes? Okay, let me quickly show you something on that 4 hours that make me mark this space. All right, so look at the 4 hours. Look at what I marked, right? So this is what I marked on these 4 hours. I've marked up here and down here. I've marked here, I've marked here. Now, this is the logic. If you look at it, what I mark, this is the, oh, Holy Spirit, help me. I think I mark a wrong thing even. No wonder. So here, where I marked, there are two things here. This is the last candle, last bearish candle before market reacted and start going up. So that last candle, that last bearish candle is called the order block. I don't want to go to this level so much. So I'm not teaching you smart money concept or ICT. No, I'm just showing you basic things. And so it's called order block. Now, for now, what makes this to be a valid order block? Now, the next thing that happens is that the markets move, right? The market move, and we have a fair value gap here. Look at this candle and look at this third candle. So this third candle didn't meet with this. Okay, so let me take this. Have you seen it now? So this is a fair value gap. This is the order block, right? So all together is the order flow. So don't mind all those jargon. So now let's go. So what I wanted is that when I go to my 15 minutes, I want to see the market to have tapped into this order block or mitigate this fair value gap. So that means I'm going to be buying and perhaps targeting up here in my 15 minutes. So let's go down to our 15 minutes. There we go. This is our 15 minutes. So now the market has actually tapped into the order block, right? And then create a reversal. But are we actually valid on this reversal? So we ought to, this is the high that make out this low. This is the high that make out this low. So we ought to break this. But for sniper entry trader, they go further down to like 5 minutes to see a market structure shift. So a smart, so sniper entry traders had This is a high, this is a low, then we have another high, this is a low. So this, grab this liquidity. Ordinarily, this ought to be taken out probably to be on the safer side. But for people who had, because there's a pass, you have built a narrative, you will want to take a sniper entry trader after this was broken, but we want a takeout here and a pullback. That will be your perfect entry, right? So if you go down to 1 minute, it's still the same. Has he actually created what you wanted? Remember, you are not trading on this 1 minute. You're only looking at market structure shift, which has actually happened, right? Because where is the lowest? Sorry. Okay, so this is a high, this is a low, this is a low, and now another high. So this is the lowest. This one is taken. It has returned back to this point. So sniper entry trader had found an entry originally, right? Already, this one was taken. Let's look at it. I'm not teaching you smart money concepts, I'm teaching you support and resistance strategy. And here, this is taken. Then you had find an entry, right? That's a small entry and waiting for another confirmation because this need to be grabbed for him to now agree that we're going up. But in all indication, you already knew that, okay, the market should be finding a return. So in other words, so when he does that, he has found an entry at that point. So that means you're going to take this way. Now, instead of entering a big lot size, you're going to enter very small lot size, targeting this point, and then the stop loss. So the stop loss actually below this. So 1:2 is still in order. And then if the market now come down, it DCA more. If the market now break this, it will DCA more. And that's how it began to trail and trail probably to get to this point. So going back to the 5 minute before now going back to his 15 minutes. Can you see now? So it's 5 minutes. So he has found an entry with a lower time frame because of this point. Now I'm going to 15-minute time frame, which is his major trading time. Are you getting it now? So then the stop loss is below that point, and then so markets retrace down is going to add more position, right? So that's what you're doing when it has to do with support and resistance strategy coupled with price action. Just a moment. Ooh, this guy sold down again. All right. So if we look at another instrument, let's look at another instrument. Oh, I thought we were on 5 was 3. Okay. Let's look at 5. Oh, this guy had been deteriorating since yesterday. Seriously. Since yesterday. This was a trade of yesterday. Now, sometimes too, I hate some instruments that are not too smart, so I just avoid them. So you save yourself from unnecessary stress, right? So once the market remains so choppy and all of that, so applying the same style of support and resistance, right? Okay, this one too was okay. I think this one too was since yesterday from a key level for that matter. Now this guy sold down very well yesterday and is still selling. So you can see the essence of marking key levels. So this key level was reacted upon. So if you go to, so for instance, you are a scalper, you have come to your 15 minutes and you mark this already, give you a mark so that you don't need to bother yourself. So you give this, and then of course you mark this. So this guy is almost forming a head and shoulder. So if You break this, so you want to now find a buying position. So now let's go. Now you're going to go back to your 1 minute. If you're a scalper, you know you are marking 15 minutes as liquidity zones. So on 1 minute, excuse me, it's already gotten up. Probably you have to wait a return down to this point or break above this. Remember, we say that's the invert head and shoulder, break and retest. You want to be finding an entry to take your profit here. So if this didn't play out, you don't trade, okay? Or you don't trade that instrument. You rather look for another instrument to trade, right? That's exactly what you need to always attend to. Because most time I see people telling me, oh, enter this trade, this market, this coin, this instrument is wicked over this, that. No, 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 no. So you can see this key level, you can see 4 hours. This is a channel that I drew before, and it got to my key level, got rejected, right? I sold, took profit here, and then returned back up, and then you can see continuation, right? So getting up here now, you can see if you are a day trader or intraday trader, so you are going to find a kind of liquidity here, which was grabbed, right? So the next candle, this is doji, right? So the next candle is in few whatever time, next 2 hours plus. You want it to actually break. If you didn't break, if the next candle become bearish, that means we are going down to that key level. Are you getting it now? But in scalping, you will have taken some money and all of that. Okay, I'm just doing all of this so that good. Look at this guy. These are, sometimes some of those instruments, the formation I don't like, right? So this is a liquidity grab. You flushed out, and then the market continues. So you are going to see this market to sell down, but I'm not going to have time to start analyzing this again. I've just shown you some of those things you need to pay attention to. Now, so let's look at 60. 60 became so funny. Okay, after giving my profit or so, to return. Now, look, I imagine this kind of market for how many days have been dilly-dallying and all of that. So finally, it closes below this key level. Then you should be looking at the market returning down. So where should we look at? So look at this point here. All right. So these guys will be selling down as it were. So now going back to 15 minutes. Good. This is 15-minute time frame. So in 15-minute time frame, if you are selling down, you are targeting to take profit here. But this is a very rather choppy kind of market, as it were, but you're selling down to this point to take profit. Okay. So that's for this guy. So let's look at 80. Okay, amazing. 80 pulling weight. If you're a scalper, remember, we have said you mark up everywhere, obvious places, right? Obvious places. Obvious places, the scalper. Obvious places. So there we go. 1 minute. Good. Because of the level of volatility of this type of instrument, see, if not ordinarily, so after the break, and then this is a retest of this point, then you will have found an entry, And these guys are very volatile in volumes. So if you find an entry here, right, to long, and then because for the safety of your account, you want to say here, the 1:2 is obviously here, right? But this guy is very, very volatile. So immediately it has crossed a reasonable point. You probably want to move below this swing low to reduce your losses. Now, when it come up to this point, you want to break even, and then probably still targeting that it should be able to hit up to, because nothing should be holding it, not hitting up to that level. So that's going to give you 1:6 eventually, but that means you are going to start being in that market to know what's happening exactly. So now the same thing, let's look at 99. Okay, if you're watching me, those instruments are not child's play. So take note. They can harm you so much if you are actually you are trading with a very little account. Okay. So now let's go here for this. Right. So now this is TD 15-minute time frame. The key level down here. The market have moved from this point. So let's go. Yeah. So this is actually a low and a high. A low have been created, but we need to break this high. It's very choppy. You can see that. Other point. So we'll go to 1 minute. More. So you can see your 1 minute ordinarily. So you wait for either this to be respected or this to be broken. It's not broken, you do nothing. You need to be, so if this one is tested and going up, you find an entry and then an entry and then targeting to take profit there. And so if this is going to happen, look at this. Now these guys have so much volume. For instance, let's say getting in here, a stop loss here or no stop loss because you're a scalper. Then targeting to get up here, that's massive, 2,000 volume. So because these guys have heavy volume, that's one of the things you need to understand. Because if you take your, okay, this is RSI, but if it's MACD, you put that to, you're going to see the thing you want to do, right? So put 50 moving average may not really be effective at this 1 minute. So you have to face your price actions squarely and momentum indicator. So you can see that this guy is still bearish, and that's what you need to know. Right, so let's quickly go. So the same thing here is what's applied here on the reef. So on the reef is the same thing you have. So I'm just doing all of this summary so that whatever applies to you there, you pay attention to it. So let's go. The reef. So remember I said we trade boom and crash here. Okay, so here is boom and crash. I always have my key level marked. So look at boom 1000, amazing instrument. Yesterday, that was massive. For anyone who caught in this guy yesterday, would have been in crazy money. 500 points with 2-3 position on one standard. That's $1,500 plus within the shortest time. And how we have this today again. That was amazing. So the same thing. So, but this guys want to go to your 5 minutes. So you've already seen this. So you've already marked this, right? And mark this equally. Then of course mark all of those points too. Right. So we'll go to 1 hour 5 minutes. Now, so 5 minutes, one of the things is that this is 50 moving average. Markets eventually weak. That's the only thing you need to know. So I'm not going to teach more detail about the strategy on boom and crash, but there are a lot of strategy I use on it. Now, this is already weak, but it's still above 50 moving average, and which still show more potential to jump up. That's what it is, right? So, but what can I do? So if you refuse to spike, break below this, you probably are waiting. So there are some things we do. Look at some of those point of spike, point of spike, point of spike, and probably look at those points again to find an entry. Now, most time, you find an entry on the place you expect a spike to happen, and the spike refuses to happen, you close and wait for another point, and then that's one of the things. So I have a target time. I actually trade boom and crash. Okay, value boom 1000 and all of that. That's what I recommend for beginners. So these guys have been creating a very high momentum before. If you go to 1 hour, you're going to find the same thing, or you go to 4 hours, which are more reasonable to trade some of these instruments. So you can see I actually marked out all of these points before we come here. And so you can see this is a point to point, this is a point, this is a point, and that's a point. So now it's like got to a point now, still reaction, right? Yeah, so this is another point, it's another point until we come to those, this is a key level, right? So you go to 5 minutes, you go find something very, very significant. Okay, so because you're looking at day trading, so here, that's cool, right? So the market has started reacting. So, but you want to find sometime more conservatively, this high had to be taken out. But for sniper traders, will have found an entry once you have a reasonable engulfing candle. This is below here and return back to the zone, and that's taking out that high at the low. And so, but you want to have something like an engulfing candle. Then you want to find an entry. Then when you break this and retest, you want to add more positions and probably targeting this point and this point as a take profit. But why don't I enter now? No, no signs. And then if you go to your even your RSI, however, so there's no volume to back up your action. Yeah, so it makes sense. So that's one of the things about all of these spaces and all of that. So have other instrument for reach 75. And so if you go to 4 hours or 1 hour, yeah, so we'll go to 1 hour and then we're going to see that. So let me take this few bit away. Okay, so you're going to find this, you're going to find this point, you're going to find this point, and all of those other points and all of that. So let's say let's come right here. This is a point here. And there's another point over here. Right, so looking at it on 1 hour, this is an uptrend, right? Yes, an uptrend. Yeah, you should know it's an uptrend because this was an impulsive move. We didn't have up to 3 consecutive. This is a low, this is a high. This is not low up to this point. So it's still okay, right? So that means the market is supposed to be returning, right? Take out this, take out this. So you're going to go to 5 minutes. So let's just go to 5 minutes right now. So here we are in 5 minutes, right? So probably you want this to be broken, let this guy to be broken. Then you want to find an entry. You want to find an entry and probably your stop loss here. Or sometimes if I'm finding an entry here, I take a very small position and then my stop loss T over here. Then my take profit over here is up to 1:2. We're going to look at 1:2. That means we're going to go above this. But remember I said when you are trading all of these, you have to be meticulous. Face one instrument at a time. If it's this one you pick it and face it. If it's that one you pick it and face it, rather than trying to jump start all other instruments as it were. So this guy need a close below here, or say close below here. Then you want to find an entry. Look at your 50 moving average. Return back to it to sell. Return back to it to sell in that order. Yeah. So this will move like so. That's why you need to see understand price action. Yeah. So very very important. Then just guess walking what you're doing. It's not. It doesn't really make sense. Okay. So you can see, right? The market is already reacting. So we need to go up. All right. So go up. When you break this, you add more positions. And that's exactly what to do. So trading is amazing if you can be disciplined enough to do what is expected of you. But if you do not do that, you're going to be creating a lot of problem, emotional challenge for yourself. And then when you are supposed to be relaxing, you'll be fainting. So you have to understand what you're doing. Effective planning is expected. You have to plan and implement your plan. It's not about planning without implementation. Plan and implement is a key thing to successful and profitable trading. If you don't implement, you will be losing trade regularly because you will be jump starting. Every trade, every move of the market will make you to react, which you're supposed to be responding to the market and not reacting to it. Loss is part of trade. So when you lose, you don't lose your sense. You lose, don't lose your sense. So you have to let your sense work. Then you can be fine. But when you lose and you lose your sense, you cause more problem. Okay? So that's it. Support and resistance strategy is very, very fantastic if you know what you're doing. But if you do not know what you're doing, I'm sorry, it's going to create a lot of problem. So face an instrument, tell yourself the hard truth, work on your emotion, then play your part in working your plan and plan your work. So plan your work and work your plan. It's very, very important. Not every time you find a trade setup. That's one of the things that make a lot of people missing trade. Not every time you're going to find a trade setup. Not every time. Not every time. Get it right. You can't find trade setup every time. No, you may. You may not. So thinking that every time you have to find a trade setup, you're wrong. You can't find trade setup every time. Sometimes we create, you'll be confused. Yeah, so there are times you're going to be confused. What you are looking for is not forthcoming. And so you have to let the market be. It's telling you that I'm not ready to vomit anything for you. So why do you want him to vomit things by force when it's not set? So it's very, very important. Plan your work and work your plan is what make you profitable. All right. So please, you are still struggling, go and enroll. You want to go into Forex full time, come into AKASHX. Then once we pick you up from there, and then so you don't need to come and pay us school fees. So you can see now, instead of coming to Plan B, perhaps pay $500 for Forex, $500 for crypto, that's $1,000 for training as basic mastery, right? Then you now start looking for money to implement what you are learning. That can be cumbersome. So if you register on AKASHX, you use the link on the comment section and activate your account. Number one, you already have access to even the training that in Plan B we're going to give. You have access to additional signal from Plan B as for me directly, and at the same time, you're going to find, of course, you now get funded by, AKASHX in partnership with Trade Mastery. And I think this is very, very amazing. So you can see the trade setup we just did. Let me, if I check, not taking you back there. Yeah, they are playing out gradually and all of that. All right, ladies and gentlemen. So plan yourself so much, plan your work and work your plan is a secret to success in trading. Work your plan, plan your work. You work your plan, you plan your work. You work your plan, you plan your work. You work your plan, you plan your work, right? Good. You work your plan, you plan your work. You work your plan, you plan your work. So look at the small trade I say you can take, perhaps. I think let's look at the 15-minute time frame. So the trade is already reacting. All right. So let me show you right now on well trade. You see now it's already going up. Remember, I will say the first take profit can be here, here, and all of that. So we'll have made some money, and that's the fantastic thing about this strategy. Support and resistance strategy. Plan your work, work your plan. You will be less stressful. You will have stress-free trading encounter, and you have more wins. Yes. So you want to reach out to us on WhatsApp +234 9047044998 +234 9047044998. So check WhatsApp, then how to get enrolled in Academy, how to get enrolled in MDC to have access to so much things like training, signal, tap to trade, different applications, and fund to start trading and making money, and of course mentorship and all the like. Then to reach out to us on that number +234 470 44998 +234 90 +234 90 470 44998. So chat us, and then we're going to respond to you so that you can build up yourself. But take note that this space is strategic, and so you have to apply strategy that works to be profitable. Thank you very much, everyone. Do have a nice time.